Joining us now, Gordon Fellows. Gordon is the president, of course, of the Mississippi Bankers Association. Hey, Gordon, how's it going today?
Gerard, it's going well. Good to see you. Thanks for having me on today.
Yes, sir. So thought it might be timely to get an update from you on what's going on in this crazy, topsy-turvy financial industry. And was just talking earlier about the Office of the Comptroller of Currency now adding a climate change chief officer or something to that effect, if you will. And at first, the position is crazy in my view. That has no place in the Office of the Comptroller of Currency. But the person they nominate, it again appears to be someone who really would rather see the banking industry be totally nationalized and go away, like the what her name was, Sala Araptarova, something like that. I can't remember. That was actually nominated to be, Amarova, right? Thank you. That was actually nominated to be the OCC chair, and she made it clear in some of her writings while in college. Yeah, we got to get rid of that banking industry, and everybody needs a bank account with the federal government, as I recall. This is crazy.
Yeah. You know, the whole sort of, there's a couple points in there, Gerard. One is sort of where is the Biden administration on each bank regulatory agency, and you bring up an interesting point on OCC, right? The comptroller right now is an acting comptroller because Dr. Amarova, the name that the White House submitted, withdrew her nomination after it was pretty clear she didn't have enough Democrat support to get through the Senate. So there is actually not a full-time comptroller in place yet. There's an acting comptroller, which is kind of interesting. They did announce this week the names of two new appointees to the FDIC board, which is I think two pretty good appointees. Actually, they're two Republican appointees who are pretty well experienced. So we'll see if those get through and when they get through and all that. But I think probably the real heart of your question here is more about the environmental side than the who's sitting in the regulatory seat side of it. And what's really we were just in D.C. last week, and we were talking with a lot of federal regulators and policymakers about this environmental conversation. And what's interesting to me about it is, we keep sort of saying, in Mississippi, we're used to hurricanes, we're used to tornadoes. We know the credit risk that these things create, and we know how to adjust for them. And look at what our banks did in the wake of Katrina to help get the economy back on track, right? We know how to do this and how to help people through this. So don't punish us, and don't overplay the regulatory strings on this. But it remains to be seen, where it's going to end, right? The SEC has got a rule out that impacts all public companies, and the bank regulators haven't issued a rule yet, but we're certainly concerned about that, and we're arguing against it hard on one hand, and then kind of on the other hand, as the feds push sort of from the left on environment stuff, a lot of red states like ours are pushing back on the right, and sometimes that creates some issues for banks too if you over push too far, right? Like I know in Texas, for instance, a bank cannot purchase a local municipal bond or hold municipal deposits if they've terminated an energy relationship, and sometimes you terminate a relationship for a business purpose, not for a political purpose. So you can create a new class of protected borrowers. And that can create issues too. So, it's to your point you were making, I think, before I got on. The more government gets involved on one side or the other, the more complicated it makes things. And I really hope that we get through this election cycle federally, and we sort of get a little more evenness out of what's coming out of Washington. I hope that makes sense.
It absolutely does, and I think what concerns me, Gordon, is that we're already, I think you would agree, and I'm sure this is a sentiment being relayed to you by your members, likely approaching a very challenging environment for the economy, and of course, financial institutions, banks, they're at the heart of that, especially with Fed Chairman Powell signaling just yesterday that it's going to continue the rather hawkish posture. So that is difficult enough as it is. You guys want to loan money. That's how you make money. I think a lot of people maybe think, well, they just don't want to loan me. No, they want to loan you money. They want to sell you that money. But it's hard when interest rates are high and you're dealing with this ridiculous regulatory environment. But now you got to worry about climate change. That's what bothers me.
Yeah.
And I think most Americans want to see these private companies really excel at what they are in business to do. And you got to be socially responsible to some extent, but it can't just overtake the entire organization and industry.
Yeah, I think you're dead on. That's our position on this, right? We're private businesses. We know what we're doing. We've been doing it for, in many cases in Mississippi, for over 100 years. Just let us do it, right? And so if you tell us you got to be more and more regulated on this side, or you got to be more and more regulated on this side, now is not the time to be layering on additional regulations, because the economy is in such a weird spinning point, right? I mean, there are a lot of factors at play right now, and you hit the nail on the head about Chair Powell's comments yesterday, and certainly we're approaching the highest interest rates we've had in a really, in 15 years, and I don't think that's going to stop. They're going to keep going up, and so I keep telling the public, one, go talk to your bank, right? Because if you've got an adjustable rate mortgage, or if you've got a credit product, that has some sort of balloon or float, you need to go work through that, because you might be exposed to some risk that you haven't thought about, and that may be coming up sooner than later. So, and then on the other end, how do you kind of get return on the cash you have, and how do you manage your cash to generate some revenue off of it, or some income off of it, to balance the increased costs, right? So go talk to your bank about how you manage your cash, and what are your investment options too right now. Everybody needs to be thinking about their financial picture, from a business perspective, but also from a personal perspective. And banks can give a lot of really good advice on that. And I do, you think about the inflationary environment we're in right now, you're dead on, right? Like there's so many policy decisions that are being made right now that are probably going to keep driving some of that. And there are more policy ideas, not just from the Fed, but I know you've had a lot of conversations about the student loan thing on here before, and so I don't think we need to rehash that. But
Sure.
That's going to be inflationary. There are other ideas that are going to come up that are going to be inflationary, and Congress has got to fund the government here at the end of the month, and who knows sort of what pork gets added to that. And if you look, one cool thing about the banking industry is all that data is public, right? You can check anything you want, and so in September every year, the FDIC updates the summary of deposits, right? So you can look at all the deposits in the country from June 30th, 2019, June 30th, 2020, June 30th, 2021, June 30th, 2022. And that just all came out last week. And nationwide, deposits from 2019 to now are up like $2.5 trillion. And in Mississippi, deposits are up, billions of dollars over the last 3 years. And so, when you hear people in DC talk about how individuals have, pretty healthy checking accounts and stuff right now, we're seeing that, right? There's just a lot of money still floating through the system, and all that stuff started in 2020, right? And it's still just you think about a rock hitting a lake and ripples, just kind of go and they go and they go, and the ripples are still kind of moving through the economy from the CARES Act and frankly too, I think if you kind of look at core inflation, one of the big drivers right now is the cost of shelter, right? The gas prices are kind of leveling out, but housing costs are getting higher. Some of that is from the Trump administration's tariffs that were introduced in 2017, but a lot of them didn't go into effect until 2020. So you're getting charged more for home building goods from the tariff side. You still have supply chain kinks. I know we just ordered a bunch of furniture for our office in July, and we're not going to get it until November. That's a pretty long supply chain, And so all of these things just continue to add cost. Is supply and demand are still kind of out of whack, and there's still a whole bunch of money in the system. So everybody needs to be thoughtful about it and go get advice from your banker about how to manage your personal situation.
Yeah, that's good advice. Just two seconds or so here, Gordon. What about the Inquisition yesterday on the Hill? Your members talking about that? Did you catch any of that?
Yeah, and they're back on the Senate side today. So yeah,
right.
I was watching some of that this morning. So you're talking about all the large bank CEOs doing their annual check-in with the Senate and House banking committees. And There's probably too much to talk about in 2 seconds, but
I got
a
you.
lot of headlines this week between the Fed and those hearings for sure.
That's crazy. Gordon, appreciate you joining us, man.